Yeah.
Speaking of the Tampa event, actually, our two guests today, Mr. Alex and Dylan from Stacks Accounting, actually met. You guys, basically, your partnership was founded at the Tampa event.
It was. Yeah.
Indeed, you're good, sir.
Indeed. That was some event, actually. But tell us all about that. Like, I remember actually watching it kind of before my eyes, and I remember, like, you know, Dylan, you were kind of coming up to me, he was like, yo, I think this is going to happen. And I was like, do it. Like, absolutely do it. Talk me through it. Like, from when you landed in Tampa, first started getting talking, and like, by the end of Tampa, like, where you were currently at.
Yeah, it was funny because, like, on the boat, the big boat, at the end, you know, I was telling people, oh yeah, like, I'm staying with Alex in Airbnb, and everyone I told that to is like, what? Like, isn't he your op? Like, why are you hanging out with the enemy? He sells the same thing as you. And I was like, no, like, we're cool. We help each other out, whatever. But yeah, just throughout that whole weekend, getting to hang out, and learn more about each other and each other's businesses, we just realized that there was so much similarities in both of our businesses. And then that very, very last night, we both had early flights, like 6 or 7 a.m. flights, I think. And we ended up not going to bed that night. We actually just stayed up literally through that entire night talking about the possibilities of, you know, partnership and how much quicker we could grow and how much bigger we could grow if we squatted up. And then, you know, about a month or two later, it happened officially.
Incredible.
Okay, how much whiskey was involved in that conversation?
Just some South Park.
How bad was the flight back?
Cocktail mixed in. It was definitely not an easy flight home, that's for sure.
Yeah. No, it's interesting.
Better off than Andy was.
Everyone was better off than I was.
It's interesting that you say that about the about like people being like, oh, you guys are ops or whatever. That's always a feel like I never really see that in CA. Like, everyone's kind of like well aware that, like, you know, like all the email marketing guys all have like group chats and talk together and stuff like that. You know, it's kind of like everyone knows that the market is so big, especially for what you guys do, because basically no one does what you guys do really in this space. Like, it's big enough for everyone, you know. So it's like everyone can kind of collab or, you know, share strategies or like kind of work together and stuff like that. So yeah, that's great to see.
Totally.
So like, what's it been like for you guys since you actually joined together? You know, like, you guys are both running separately for a little bit. What's that big shift been like since you got a combined forces?
There was a lot of work in the beginning to just getting all the infrastructure merged up with clients, Slack channels, softwares. What we did was we kind of meticulously planned basically like a launch offer. So we could bulk up our fulfillment, and at the same time decrease the cost of it. And so we spent a good amount of time building up kind of like a launch sequence, a website, even just getting all of like our social proof merged together. It took some time for sure, but I think we launched that launch offer probably in December, like mid-December. And we weren't even really done like merging everything together. So like where we are now is like night and day to where we were even at the beginning of the year. But, you know, it performed really well. I think we ended up bringing on like 5 or 6 clients from that. And it was a lot in the beginning, but, you know, we realized like the biggest thing that we kind of realized was one, like the culture fit was a match. You know, we're both good guys as well. Like character, everything was there. And we just realized like it's a lot running an accounting firm, one person alone as well. So it's like, we both felt like we can just go faster and further together. And there was a lot of complementary strengths that just made sense. And, him and I, like Dylan and I both would send each other some work back and forth months prior to Tampa. So we had kind of already built up like a rapport and got a feel for like our operating style. But I think, you know, first and foremost, like for sure, when you're looking for a partner, I mean, you got to go with like not only complementary strengths, but the character and type of person you want to be with too. because a partnership, it's a lot of it's going to be values, and you're building a company culture at the same time. So what's that going to be? What's your vision for that? Everything kind of flows down from there. The skills are just one aspect of it, but yeah, we've been full steam ahead now, almost 6 months, and it's been great. We're really pumped, and excited for Tampa in the next few months. That's gonna be fun.
Yeah, it's been awesome to be able to divide and conquer, kind of like what you were saying, like to be able to come together on a team meeting, talk about the 6 things that need to be done, and then split up. Hey, you do those 3, I'll do these 3. We can just move so much faster than when we were alone. And we talked a lot about that. Like me and Alex both would have eventually gotten to the same level of success. Like we're both smart enough. It would have happened even if we stayed, solo. But it's just gonna happen so much faster being together and much more stable as well. But like he said, the logistic intensity of merging 2 accounting firms was much more than we anticipated. I definitely took, a couple of months, but we're super now. And
I just want to actually touch on that, like looking back on that experience for, and I understand you guys are an accounting firm and it's a very different business style than most other like agency businesses. But what advice would you give to any businesses that are currently in talks of joining forces, and like, what were some of the pitfalls that you didn't anticipate throughout that process?
Dude, we use so much more software than we realize. So like Alex said, like getting on the same email domains, getting our Slack channels merged, getting clients over, getting my clients to sign new operating agreements under stacks.
Pricing too. Like, there were more components to my offer that was live than Dylan's was at the time. So what were we going to do for Dylan's clients? Are we also going to provide this now? So, because for taxes, Dylan had it all wrapped up in one, but he was using a different provider. I was using a separate provider. And so thinking through the deliverables, thinking through pricing, we made a decision to just keep everything kind of the same in terms of pricing. And let's just make sure that like we just take it one step at a time. Definitely like don't rush into it. It's, it might be really exciting at the time. And like, there's all these shiny objects out there when you're thinking about, how quickly we can grow, or we can, oh my God, we can double our clients tomorrow. And now we can both focus on different things, and we can do everything at once now. It's like, it's exciting, but plan it out. Like, what does it actually look like for your communication structure? What does it look like for your existing team members? What about like hierarchy and standard operating procedures, pricing? Are you going to go and upsell some clients that now have more components to their offer and more costs to you guys to fulfill, but it's not a very profitable engagement because originally they were operating at half the price of what our typical fulfillment retainer is. So those things you really got to think through, and you also don't want to sacrifice your existing clients when you do merge, because there's a lot of stuff going on, a lot of moving pieces, and you don't want to drop the ball on your existing clients. You still want to deliver. So I would give it a few months, honestly. Like, expect twice the amount of time that you think it's going to take to really get everything merged, and you'll at least have a little bit more clarity and planning ahead of it. So
I think it's important to note too that when me and Alex partnered, neither of us were complete beginners. Like, we've both been in business well over a year. We both had, baseline skill sets across all of the skill sets you need to be running your own business. It wasn't like we were both at, $500 a month or $1,000 a month and came together, right? Like, we both had fairly established things going on. And that's where it was like, okay, you like doing this part of it a little bit more. I like doing this part of it a little bit more. If we combine our social proof and both divide and conquer, like, we'll grow so much faster. And that has been the case. I mean, we've, added quite a significant amount of clients since we've merged, and we're not even a full year in yet. So
yeah, the other thing too to note for sure, like, because you're a partnership now, there's going to be things that come up that you guys haven't previously discussed or even thought about. Like, what about conflict resolution? What about your operating agreement? What about ownership and those sticky decisions that might come into play? Because, you know, a lot of young business owners treat their business like a personal ATM, right? That's not going to be the case when you have a partnership. You've got to have kind of defined rules for, like, what are we doing with our cash? Are we going to reinvest it? Have you been withdrawing every dollar out of the business that's been, you know, after your profits? Are you taking it all out? Now, when you have another person in the picture, what are you guys going to do collectively? What's the strategy a year, 2 years out? Are you guys going to stack cash and reinvest everything into the business and forego kind of just taking everything out and using it for whatever you want right now? Or are we going to focus on like building the business, and maybe we're going to make a little bit less cash personally on our own in the meantime, but it's serving a long-term goal? So you really do have to dial the vision as well. Like, what's our plan here? And making sure that even just your operating agreements, like the legal stuff, eventually, say you guys you scale up, the company grows to a 7-8 figure business, and 3 years, 4 years down the road, you want to sell it. There's legal implications to that. So you got to make sure to also have the ownership structure signed on the dotted line. Like, a lot of clients will just send their, initial articles of incorporation in their operating agreement, and it's never even signed, and they have a partnership. So if it's not signed on the dotted line, you don't actually have a partnership legally. So there's important things like that that kind of gets overlooked.
Yeah.
Yeah, makes a lot of sense. Yeah, good lesson for a lot of people that are currently in that, in that stage looking into partnerships, because it was a real big theme at last year's Tampa event. That was one of the cornerstones all the founders were talking about, of like, eventually you'll hit a point where you just cannot do this alone anymore. You will have to join forces or look into getting some form of a partnership. Like, scaling an agency solo to 100K is significantly more difficult and significantly longer than partnering up when you're at, like, say 50K, 40K.
Yeah. And for me, one of the things that was a value add for me that I was thinking of when Dylan and I were going back and forth was, eventually I don't want to be having to be on all the sales calls. I'd like to have some freedom of movement to where I don't want all my day behind a computer if I'm on calls. Like, eventually, obviously, we'll be bringing on a sales team, and Dylan will more or less just be managing that. But, for me, it's like, it's also for the offer. It's hard to get a very solid salesperson for an accounting firm that also knows the ins and outs of, like, blending that with kind of like a forward digitally focused agency that most people are in Client Ascension. So, for me, it's like, as you grow, you're going to end up having to contract out and hire somebody to do X, Y, Z, and sales being a big component for us. The money's going to be going out regardless. And I figured Dylan and I can team up. That's a relative strength that we have. So it made sense to, in that thread, it made sense to team up because it solves the issue, but we're also getting somebody that knows the offer. We're selling similar things, less training on my part to explain to any new salesman if I brought somebody else on how to sell this offer and the nuances of all of that. It's tough to find somebody with a lot of accounting experience, but also sales experience. So that was definitely like a consideration as well.
Yeah, and absolutely. As you guys kind of mentioned, you mentioned there, like, your offer is kind of, it's fairly unique in this space. Like, there's not many people kind of that understand the agency kind of world, like what a lot of the guys in CA are doing, as well as the in-depth kind of accounting knowledge you guys sort of have. And I think it's one of the biggest things that people, when they're starting their agency, really do struggle with is the finance side of things. As I said, Alex, a lot of people are using the business as their personal ATM. They don't understand the kind of delineation between their personal account and their business account. So when someone is like first setting up their agency, what do you think are, like, say, the top like 3 to 5 things that they absolutely have to do when they're setting up their finances to kind of really get involved in the agency space?
First of all, and this is going to be relevant mostly to US based businesses.
Of course, yeah. That's
but definitely want an entity of some sort, single member LLC, if you're a partnership, multi-member LLC. And then depending on how much money you're making and your goals, it could be an S Corp, could maybe be a C Corp, but probably not. But you just want an entity that's separate from yourself, and then you need to have business bank accounts under that entity. Like one of the worst things is, you'll have people making, 40, 50, 80, 100K a month, and they're running it through their personal accounts. And there's just no organization that way. You're basically completely commingling your business and your personal, which to get any meaningful financial insights while you're doing that is incredibly difficult. And it also makes your taxes 10 times more difficult. So like the baseline thing is, an entity and separate, business and personal bank accounts that you're operating out of. And then from there, having solid books. So as soon as you're able to pay someone else to be doing at least your bookkeeping, I think it's worth it. I think 99% of the time, it's noble to try to do your own bookkeeping or have a family member do it, but you're hurting your business more than helping it by doing that. Like you're just fucking your shit up worse by trying to do it yourself. So having someone in your corner that can help you out there. I think also something that's missed a lot in our space is, and this is kind of nitty gritty, but like in your financial statements, like in your income statement, actually having your cost of services broken out so that you can see a gross profit margin. Basically being able to see, okay, what does it cost me to fulfill the service that I'm providing? So like if you had a video editing agency, that's probably paying the contractor that does the thumbnails, paying the contractor that does the editing, paying for the video editing software. So having that broken out kind of separately as a cost of service so you can see a gross profit margin will give you a little more insight, because if you can increase your gross profit margin, that directly increases your net profit margin. So there's a handful of things there. Alex, you have anything?
Yeah, I would say, like day one, yes, at least get some business bank accounts, get an entity set up. A lot of what you're going to be doing in the early days is revenue, fully focus on just revenue generating activities, right? Get your cash up, get your clients up, like reel in your fulfillment, make sure it's solid. This is obviously like with the understanding that you've already gotten your offer in place. You're doing something that you're good at, that you like doing. And I would say like, at least for 6 months to a year, you should, like, it might be exciting once you say hit 10K a month, but in reality, that's not a whole lot when you're thinking on a long-term horizon of growth. Like we're approaching like 50K a month right now. And even now, I'm still not even fully comfortable, like feeling like the both of us can withdraw, 10, 15K out of the business each month. Like we want to be specifically reinvesting cash to be able to grow quicker. It's all about, speed of movement. The more you can deploy cash to recoup your time and to have a force multiplier on your growth, the quicker you're going to get to 50K, 100K plus a month. And, for us, it's like, it just makes sense. And if you're just kind of starting out, I would say it's exciting once you start getting some cash rolling in, but fight that urge for at least for as long as you really can to just start taking it all out and going to buy some clothes, feeling like you can be a king at the club with bottles and stuff like that. All that stuff, it doesn't matter. Like focus on reinvesting your cash and growing the business and having a growth trajectory in mind for what you want to do, because pretty quick you're going to find that you need somebody to handle your emails or handle your sales or whatever the case might be, and that's going to cost money. And the sooner you can reinvest and kind of go to your next growth point, because just like Fazio always says, like you might have 2 months of like parabolic growth, but then you're going to reset at a certain point. It's like that momentum will plateau and then you'll hit a new baseline. And then it's rearranging the business and the internals and your team to be able to facilitate at that level. And then you go for another bump or two up and then it plateaus again. Like that's just always going to happen. It's not going to just always be a straight line. So the more you can just, have cash to deploy to be able to continue your growth is better. So, early days, focus on stacking cash and reinvesting it. I would probably dissuade people to get excited and start pulling all the money out of the business on day one.
Yeah, I think that's
I agree,
actually
and I would like to add, like,
interesting what you brought up.
it's basically saying the same thing you said, but just building a cash reserve. Just building a cash reserve to where. Sorry, was it lagging up? I was just saying, building a cash reserve to where, if your business blew up, how long could you survive?
Yeah.
You know what I mean? If you're pulling every single dollar amount and your business blew up, are you going to have to go get a job next week to survive? Or do you have a 3-month cushion where you can pivot? Because the reality is, in the agency space, not every model, but some models are kind of quick money. And there are certain things that get hot and trending that come and go. Our offer's a little different. Accounting's going to be here forever. But you see different booms. You had Facebook ads that were booming at one point, and then that's kind of shifted, and now it's been UGC and et cetera, et cetera. So if you have to pivot or something blows up, how long could you survive, with that cash in the bank to make a good pivot?
Yeah. I mean, the market is all cyclical. Like, for a while, dropshipping was super hot, and then it cooled off for a long period of time. And then it kind of got reinvigorated and came into the Twitter space. And I know a lot of people that did very well capitalizing on that interest when it kind of came back around. But it's just like, say you cater specifically to growth operators. It might be that, some of the voices of authority on Twitter just start shitting on growth operators, and then all of a sudden nobody wants to hire them. It's like, okay, then 3 of your clients, their revenue goes down 50%. And what do you think they're going to do? They're going to look for ways to cut costs, and then there goes your client. So, consumer or customer concentration risk, like if your clients are all in one niche, and it's like, the first thing to go typically on like a market downturn is marketing budgets, right? Companies need to start scaling back. If all of your clients are in marketing, that could pose a problem. So, it's a positive and a negative. It's just, I'm more so illustrating, like, to Dylan's point, you want to plan for the rainy days as well. That's really important, because if you lose 3 clients and 2 of those clients were your largest clients, all of a sudden now you're back from profiting 10, 20K a month now down to like 5 or 10. So making sure that you're not overextending on your cash, that's just one of the reasons why it's so important for what we do. Is like, our clients, the owners of these companies, need to know where they are in terms of cash levels, because it all fuels the fire for their growth, and also make sure that they're not overextending, or if they lose a bunch of clients, they're not going to be, shit out of luck, and now they're starting from scratch. So really important.
Yeah, absolutely.
And if there's one thing that you take away from that whole thing, like one thing you take away from this episode, have separate business bank accounts, have all of the business activity be in the business account, and have all the personal activity be in the personal account. Like, if you do nothing else but that, like, you'll at least be okay. Because even if you don't have an accountant helping you all year, you go to an end of year accountant. If all of the business activity is at least in one place, they can help you out, and they can sort through it and try to organize it and try to help you out. But if it's super commingled, man, there's just only so much an accountant can help you with at that point.
Yeah.
Yeah, I think
we have a client doing $100K a month, and all their stuff is in their personal. They just signed on with us, and so yeah, they don't even know what a QuickBooks account is. So there's sometimes I'm amazed at how far people get without actually knowing like what they're actually making, where they're spending their money, how are they tracking it. It really is important. It might not seem important now. Accounting is not sexy as much as we try to make it. But like at the end of the day, there's a certain point in a year where all of a sudden an accountant is the most important person in the world. And you don't want to be on the grid with the IRS, because once you're on there, they'll follow you around forever, and it's not fun.
Yeah. I think that's the biggest misconception about people having accountants. They probably just see as people that they just do their taxes and that's it. Like, how do accountants actually help a business save money?
And make more money.
And make more money, exactly.
Yeah.
Like, how does that actual process kind of look like when you do take on a client?
Well, we first want to break out like how we're tracking things. So like bookkeeping, the gist of that is basically you're just putting all the transactions in the proper buckets. So what we want to do is take a look at what their offer is, what they're selling, what different components of that is, and separate that out from an accounting perspective so that we know that revenue from this offer, from this service, these 4 or 5 services are going into its own bucket. And then we also then want to track the costs of each one of those so that at any given time, in a given month, we can not only see where your profitability is for XYZ service and compare it to prior months as well. And so, there's been multiple times like, Eamon was one of my first clients, and when he was growing to scale, he had a client paying him, I forgot how much it was like $5 to $10K a month or something like that, and he had thought it wasn't a profitable client, and the amount of time he was spending on it, he just kind of had this knee-jerk reaction that I'm just going to churn this client because it's not serving me in the way that it needs to. It's becoming a bit of a headache, spending too much time, and it's not profitable. And we started basically crunching the numbers and found out he's actually a lot more profitable than he initially thought. And so he kept that revenue in place, that profit in place, where he otherwise would have assumed it wasn't profitable and tried it and phased it out. So little things like that can go a long way. And being able to know where your profitability is across the different offers that you have, even if it's just one, those fuel the decision-making aspects for where you're trying to go. Like if we know that consistently you've been making, $8,000 in profit per month for the last 3 months, we now know that, here we can allocate X amount to hire, a copywriter, for instance. Like, what does that look like when you're thinking of growing and adding to your team? Like, what are the implications of that monthly cash flow that's now going to be dedicated to bringing somebody on? How's that affecting my profitability? How's that affecting my cash flow? Does that support me for the next 3 months? Because we're trying to now add 2 more clients. There's all these different assumptions that can be made when you're trying to basically grow, especially in the early days. So the more you have clarity on your numbers and clarity around like the cost for your team, the profitability, how much cash you're keeping in the business, all those things fuel your decision-making power as an owner. And ultimately, like there's constantly time and time again, we find things that there's been plenty of softwares that people didn't realize that they're spending on that they actually are. And it's actually significant once they all get added up. So there's many different ways we can find ways to not only save money, but also to push further. Like for instance, you might find that you're spending a lot of time on this component of your offer, but it's actually losing money. And you might think otherwise. It might make sense to 80-20 the whole situation where you're spending actually only 20 or 30% of your time on this component, and that's actually making the majority of your money in profit. It might make sense to cut the other one. And sometimes it just takes somebody with a fresh set of eyes at a 30,000 foot level to come in and just realize and tell them like, hey, you're actually making a whole heck of a lot more money over here and you're spending a lot less time to do it versus this side over here. You might want to rethink that or consider finding a way to streamline this side over here or get rid of it altogether because it's not necessarily serving you. So that's kind of like the power of finance and accounting, and basically it's all about bringing more clarity to help the business owner scale.
Yeah, for sure. It's getting a feedback loop on your financial performance every single month instead of once per year. And, talking from a straight tax perspective, right? Like if you're only talking with your accountant when it's time to file your taxes and they're just checking the boxes, you're almost certainly leaving money on the table. Like probably a 95 to 99% chance that there's some money being left on the table there. So, you know, proactively meeting with your accountant so they can actually do some planning, so you can actually walk through, you know, what your goals are and what, you know, tax planning, not just for the current year, but for the next 3 years, the next 5 years, the next 10 years. Because, you know, true tax planning is how do I pay the least amount of tax over my lifetime, not just this year. So on the tax side of it, that's kind of where it comes into, you know, just having a more proactive approach, because once the year ends, there's only so much you can do. Like once the year's over, like that's kind of what it is at that point for the most part, right? So being able to proactively meet with someone to help with your tax planning to make sure you're being put in the best position possible before the year ends, you know, could result in thousands of dollars in a single year of savings, and over your lifetime, it definitely adds up.
So not to use a dirty word in the accounting world, you know, but you mentioned like paying as kind of little tax as possible. What would you consider a very common or efficient tax loophole, so to speak, you know, or something like a method that people use on a regular basis that would help them pay less tax than they normally would on their personal income?
Sure. I mean, I don't like the word loophole because none of it is really loopholes. Yeah, like everything is in the tax code. All of it is legal, yeah, right? Like
that's what I mean. Yeah, I'm not saying don't look for any illegal methods here. Just, you know, like, yeah.
Yeah, tax avoidance is legal. Tax evasion is illegal.
There you go. That's what we're about now. Your favorite tax avoidance methods. You know?
I think for a lot of agency owners, what's relevant is, you know, like stuff that you already like and do in your personal life that bleeds into business if you're like a solo agency owner. Right? Like for me and Alex, we have clients all over the United States, right? So, you know, if I would like to take a trip to Tampa, Florida, I could very easily turn that into a business trip, right? So like just taking advantage of what you would do anyways in your personal life and making it business and adding a true business purpose, right? Like if I went to Tampa, there would be a true business purpose, because I know so many agency owners there. Right. And I could turn that into a business trip, right? Like the best tax planning is, you know, the tax planning that fuses in with the stuff that you enjoy personally as well, right? Like I have kind of a little battle station, not as cool as Lucas is, but I do have a little battle station with some monitors and keyboards and the mic and stuff. And, you know, do I occasionally play some PUBG on my business computers? Yeah, you know, but it is, you know, for business otherwise. So I think some of that stuff, you know, for online people, I love traveling, like using business travel so you can go around and meet clients and go to conferences and stuff like that. Wouldn't consider it a loophole, really. It's taking advantage of what's there and just turning it into business.
Yeah, and early on, I mean, your operating expenses, if you're pretty early on and you haven't generated a whole lot of revenue, chances are just like your regular business operating costs will, you know, eat away at most of your taxable liability. If like that's all you're doing, you don't have like a W-2 job on the side. Sometimes there's the mistake made of like having all these expenses just for the purposes of, oh, I can write it off. Like make sure that there's a utility to it, you know, because sometimes people make the mistake of, I mean, we know somebody who issued they went into this huge like real estate investment or bought this expensive car and just thought they could write the whole thing off. And it's like, no, that's actually not the case. There's in certain ways, yes, you can get some tax benefits from that, but let's just say you want to go and invest all your money in crypto and your business activity is not even anything remotely close to investing. It's going to be hard selling that to the IRS. Like they ask, oh, what do you do? I'm a copywriter. It's like, okay, well, you're trying to book $60,000 of losses from Bitcoin. I don't think that's going to fly. And there's a limit to how many losses you can actually carry forward in your personal returns as it is. So if you have an account in place and you're looking to make a big move, like I know it sounds annoying, but oftentimes like there's multiple cases where, you know, I've heard like our tax partner who handles a lot of the higher level kind of tax considerations. There's been times where he's been able to save a client over $1 million in just taxes because of the way that the mechanism and the approach of how this person approached like this investment or this equity structure. You know, there's considerations to all of it. So the more you can actually check before you go and make this big move, it might be good to run it by somebody who's focused on knowing here's how we can approach it to get the same result, but ultimately save you $100,000 in taxes at the same time. So even just having those discussions with your financial advisor, or your tax accountant, or your CPA or your CFO before you make some of these bigger moves, I would say it's always going to be a good idea.
It's hilarious to me.
Yeah, he hit it on the head there. That was...
Sorry, I was gonna say, imagine like when you guys get in the call at like 2 a.m. just being like, yo, dude, what's up? Yeah, I lost like 60K and a bunch of shit coins. That's a tax write-off, right? It's not a big deal. You're like, no, not at all. Nothing whatsoever. You've lost that 100%.
Totally. Yeah, and I was just gonna, go off of what he said because he hit it on the head, right? Like, there's so many people that become so like they want to write stuff off just for the sake of writing it off. Like, that's definitely not how it works. You would be better off keeping that cash in your business and fueling growth versus spending that money just to spend it just for the sake of the write-off, right? Like, when you go to purchase something, there should be a true business use. It should be something that propels the business forward, right? Like, we have a ton of clients that are under 25 years old, and they run into some money and they just become obsessed with wanting to purchase a car and write it off. How can I purchase a car and write the whole thing off right now? And it's just, that's not something that is actually moving the business forward. And if you buy a car and write the whole thing off in that first year, you're just hurting yourself in future tax years, right? Like, most people aren't at a place financially where it really is advantageous to depreciate the entire car in the first year and take that full write-off. Some people are, but most people aren't. So in a lot of ways, you're better keeping that cash in your account. When you spend $1,000 on a write-off, your true tax savings, if you're in the top tax bracket, is, $370. It's 37%. You're spending $1 to save 37 cents essentially. So, unless it's something that's really going to move the business forward, you're better off keeping that cash in your account.
Yeah, it's not free. You just are not getting taxed on that.
Yeah, I think people think it's free. I genuinely think people think like I just bought a Rolex. That's like 10 grand, just gone. They get off my business. It's fine. It's like, no, you still have to pay for that. You idiot.
Yeah, I think that is one of the I'm glad I have you on here because I've always wondered this, like, especially in the internet money space, and you see all these guys and they're like in Dubai, and me and Lucas have kind of shit on these people plenty of times before. But like these internet money kind of influencer type guys, they get out of a Lambo like, and they're like, this is how I got this Lambo and a complete tax write-off and it's essentially free. And I'm just be sitting there sometimes thinking, if there was a real accountant here, I'd say they'd look at this content and go, that's not how this shit works at all. Like, is there any truth to that? Or like, are they just completely phony or?
Totally. And I think there's going to be a crackdown on some of these people that are, being pretty egregious with their content. And the IRS is going to start cracking down on it. I think they're already, like, there was something I read that, the IRS put out basically notice that they're aware of this. This stuff is going on where people are just flinging this super fringe advice on how you can just write off an entire house in full or a Lambo. And I think you're going to start seeing some crackdown on these people that are spewing this nonsense without actually knowing what the implications are, and some of them are just completely on the face incorrect.
There is an intern at the IRS whose job is to go through TikTok and save videos into a spreadsheet and just be like, all these dudes are going to jail, like every single one of them.
Yeah, and also stuff, power of AI too, like that. if you have a call and there's an AI recorder that's, listening and taking notes, like that's a paper trail, so soon the IRS is going to be able to start leveraging AI to be able to just immediately fill up the buckets in terms of like the red flags that they see on XYZ return to trigger an audit. It's, they're so handicapped with their human capital to be able to go and look through all these things. But once you start plugging in some AI models to suss out all those little red flags, and you get enough of them to where, boom, it triggers an audit, that's going to be able to be done a lot quicker. And I think, just be careful of what you're putting in writing and what you're saying. There's a time and a place to talk about how you can avoid taxes legally, of course. I say avoid, not evade. But, that's why it just pays to not write down all these flagrant things, or just be purposeful of what you're putting in writing or letting an AI recorder record. Because at the end of the day, like if you get subpoenaed and they want to start looking into shit and all that stuff is fair game, and you could end up in some hot water.
So you heard it here first, folks. Cancel your
and vehicle related stuff specifically. Yeah, vehicle stuff specifically is heavily scrutinized. Like deductions and depreciation around your vehicles is high audit risk. So people try to write off a whole vehicle and they come to them and say, okay, where's your mileage log? How can you prove that this vehicle was used 100% for business and not for personal use whatsoever? Right?
Yeah.
And it's heavy audit risk there. And then there's also something called like depreciation recapture, right? So if you buy a $100,000 vehicle that's over 6,000 pounds, whatever, say you depreciate the whole thing, and then say 2 years later, you sell it for $80,000. Well, from an accounting perspective, the value, the fair market, like the value of that vehicle is now zero. You just sold it for $80,000. That's an $80,000 gain that's now taxable, right? So those are like some of the long-term thinkings when it comes to people just trying to write off a vehicle. It's like, there's just more considerations than buying it and writing it off in this year, right? And that's why I say it's going to hurt you in the long term.
One really key thing, especially for people in the US, IRS wins over 70% of their battles per se, because the IRS just wants to get more money, right? So like the low-hanging fruit for them to say you actually owe more and now we're going to attach the penalties and interest, it always, the heavy majority of the time they're winning their battles on underreporting of income. So if, let's say you're working as a contractor and you get 1099s from 10, 12 different other people that said, we paid you $8,000, $10,000, $12,000, whatever. And then you go on your tax return and say you only made $7,000 for the year. That's like the easiest, always, every time that they look at way to come after you. So if you're underreporting your income, chances are the IRS is going to flag that. And so that's why you just always want to make sure it's accurate. That's really the biggest thing. They win 70% of those cases.
If you receive a 1099 or a W-2, that information was also reported to the government. That's not just sent to you, right? So like people get those 1099s, like he said, and they'll be like, oh, fuck it. Like I didn't make that much. And it's like the IRS literally already knows how much you made. Like you're going to get the audit notice, or you're going to get, hey, pay us this much. You did your tax return, you fucking dummy. Send us 10K or whatever. Happens all the time.
So people,
the number one notice that the IRS sends out is, underreporting of revenues or mismatching of, how much someone made on their tax return.
So like, it seems like it's very easy to make these sort of mistakes, or very common at least, that people make these sort of mistakes, right? So especially when people are first starting in the agency business, at what size or like income level do you think they should look into hiring someone to oversee their finances completely?
There's levels to it, right? Like it depends. Like, you could get a bookkeeper, someone that has some accounting experience overseas that's fairly cheap. Is the work going to be as good as someone US based? Is more expensive? No, but when you're at 2K a month, 3K a month, and you can afford a few $100 a month for someone to just handle at least that part of it, I would say it's worth it. And then as you grow, you can get more of a, fractional full-blown team, kind of like what me and Alex do, where we handle, the entire accounting process and some CFO stuff, between the books and the tax returns, payroll, and the reporting and consulting. And I think most people, at least for our offer, I think it makes sense, as you're approaching 30K a month, and absolutely beyond that, once you're beyond 40, 50, 60K, absolutely worth it. But if you're under 10K, I think just a bookkeeper is great. But once you're, over 20K, getting to 30K, you're starting to come into a territory where meeting with your accountant, once per year to file your tax return is not the most optimal, right? Like, you are going to be leaving money on the table in that situation. And that's where I think it makes sense to move into something a little more hands-on, like what me and Alex do at that point. And then, if you make it to where, because we can take people really from, that $20,000, $30,000, $40,000 a month, we could handle the accounting process for that business all the way up to a business that's doing 10, 20 million a year, right? And then once you kind of get beyond, you move into 50 million plus, then you're probably starting to hire in-house CFO full-time, in-house controllers and things like that.
Yeah, makes sense.
Perfect. So guys, if for anyone listening in that maybe haven't like doing accounting or, in some sort of accounting job and want to scale their own thing, why should they join Client Ascension?
It's just such a force multiplier of your time. I mean, I think like if I could sum it up in one sentence, it's like shortcutting 3 years into one. This is kind of a no-brainer. I think a lot of like my first clients and probably Dylan's too were people that were in Client Ascension. It's just like one big ecosystem that feeds off of each other, helps build each other up. It's gonna be an accountability. There's accountability aspects to it. You're gonna sharpen all of your tools. You have every segment of your business. There's education and people that are experts in each one of those spaces that are there to facilitate and help you grow. So it's like the definition of insanity is doing something over and over and expecting a different result. If you instead are surrounded by teams of experts, just like Graziosi said the other day, go and find somebody that's doing what you're doing, that's 5-10 years ahead of you, and literally just do that. Like, copy that. Why go and try to reinvent the wheel? And you have so many people that are there in Client Ascension that have gone through those mistakes. So do you want to do it quicker, or do you want to do it slower and make it more expensive? It's pretty easy.
Yeah, it's like university for business, basically. Like the accounting degree equipped me with a skill set that was valuable, and Client Ascension helped us monetize it and build a business around it. Because they're different skill sets. Like having the skill of, what you're really good at, and also having the skill of building a business around it are two different skill sets. Yeah. And Client Ascension, definitely equips you with all of that. And then like Alex said, like, we've been in it for over a year. I mean, for the most part, everything that's in the modules, like, we understand at this point, but we keep paying to be in it because we like the community and we like the people and we like the accountability with Andy. And like Alex said, we get clients from it. Our partnership was formed in it. We pay people that came from Client Ascension, the people that help with our ops, people that help with our cold email, some people that help with our sales stuff. They're people from Client Ascension. So it's like when you need help with somebody, you know that there's somebody in the community that's vetted, that is an expert at the thing, that you can, use that network to help grow. And you don't have to worry about if you're hiring a good agency or not, because if they're in Client Ascension, they're probably pretty good.
Amazing. So guys, if anyone wants to work with you or find you online, where can they find you?
Stacks.pro, the website.
Stacks.pro.
Go on our Twitter accounts, our YouTube. We have a bunch of resources there, and we're also building a module in Client Ascension as well. We expect to finish that soon. I think that's going to be a big help. So if you're watching this and you end up joining, that'll probably be in there by the time you are in there. But join today. But yeah, our website, Twitter, we're a pretty open book. We get back to everybody. So
love to hear it. Jen,
if you're in Client Ascension and listening to this and you need help with this stuff, especially if you're US based, you know, we do have a Client Ascension homie hookup price as well. So hit us up.
Definitely go to Alex.
Absolute gents.
Need your finances sorted out 100%. Best guys in the biz I've met so far. Thanks so much, guys, for joining us. It was a fantastic one. I think there was a lot of super valuable information there, so that people definitely didn't know about before. It's definitely an under kind of focused on area in the agency space. So I think it's going to be great for a lot of people out there. And thank you again for joining us.
Thanks so much, gents.
Thanks for having us. Hope you got some sauce.
Peace.
Thank you. Bye. See you guys.